Hi, this is Jay Otluski. I'm the broker owner here at Desert Home Premier Realty in Surprise, Arizona. This is the July Phoenix Real Estate Report. Some interesting numbers this time. Total sales was up 3%. We're up 3% from the previous year. So about 7,800 homes sold in July. And again, that's 3% higher than last year, July. Keep that 3% in mind because the next number kind of freaking me out a little bit. The total number of homes available on the market, 21,553 at the end of July. That's 9% lower than the total number of homes available 1 year ago in July. For some of you remember, that I've mentioned before, during the heyday when prices were just jacked out of shape, we were down to about 16,000 homes for sale. That's only 5,000. So for an area like Phoenix, 5,000 can get eaten up quickly. And then during the depth of the recession, we were almost 50,000 or just over 50,000. So we're continuing to push into a true seller's market. I guess at this point I'd have to say pretty much every market in Phoenix is a seller's market. We're not going crazy. There's no 50% increases, but as inventory continues to drop, demand continues to go up, that supply-demand factor starts kicking in. Let's just get through this. So the month's worth of inventory under 3, so that just means that we're in a seller's market. Average sales price, that's what most people care about, is what are things selling for. So the average sale price in July was $272,800. That's up 8.6% over a year ago, so a little higher than normal. We've been running in that 6.5%, 7.5% for about a year and a half now, increases. Now we're pushing, 8.5%. So we're seeing, obviously, higher sales, lower inventory means higher pricing. Now the median price, which if you're not sure about what median is, average is just all of them divided by the total, and there's your average. The median means that if the exact number of homes for less money and more money. So really what we're looking at with this is more low-end market versus high-end and where they're fluctuating. 225, so that 225,000, so that's up 7.5%. That's one of the highest jumps we've had in a long time in the median, because the median always drags behind average. But what that's telling us is we continue to run out of those lower priced homes, the 150s, the 180s. They're just disappearing, which is not good news for first-time buyers, but that's a whole nother story. Total distress, not a big deal. We're down another 25% over the year. Distressed properties, so that would be REOs, foreclosures, short sales. That's only 2% of the market. At the worst part of our market, it was about 77%, 78% of the market. We're at 2%. So obviously, if you own a home here in Phoenix, you're loving this market. If you're still on the fence thinking about making a purchase, it just is what it is. Rates, fortunately for you, haven't gone up much, although I would expect to see that kind of trickle up a little bit over the next 6 months. It's the price that's hurting you. So if you're getting a mortgage, in the last year you've just lost, a $10,000 or $20,000 home value. Now you got to look lower to get the same payment. So the last thing I'll just say is the days on the market is 67 days. Not a big deal. That's the average. 74 was a year ago, so we have dropped average days on the market. But we've got homes that are selling in a matter of a day or two, and we've got some that are overpriced or just not priced right for their condition or location that are taking 100 days, 200 days. So I hope this helps. If you have any questions specifically about this, or if you'd like information drilled down to a neighborhood or a city, just get with one of your Desert Home Premier agents, and we'll be happy to dig into the numbers for you. All right? That's July. Let's see what happens in August. Take care.